So good afternoon, everybody, and a very warm welcome to our webinar this afternoon, Finding New Funding Options for Real Estate Owners. My name is Kevin Marriott from IPSX, and I'm delighted to be your host today. Now, before we start, I'm going to turn over to Stephen Cowperthwaite, who is Managing Director and leads the Liverpool office from Avison Young. Stephen, over to you.
Thank you, Kevin. Yes, I'm Stephen Cowperthwaite, Principal and Managing Director at Avison Young's Liverpool office, and I also chair the Liverpool MIPIM steering group. And this is the latest in our series of webinars that we've been carrying out during the summer and moving into the autumn months as well. And you know, Liverpool at MIPIM is very much about a collaborative approach across the public and private sector, and having a 12-month conversation, not just about 2 weeks in Cannes or in London. So this gives us an opportunity to have a voice on a bigger stage, both nationally and internationally. But I think an important part of this as well is that we explore new ways of thinking, particularly in a post-COVID world, as we look to build back better into recovery. So I think very opportune and timely to have this webinar today, looking at finding new funding options for real estate owners. So I'm looking forward to sitting back and listening to our expert panelists that we have today. So my pleasure in handing the reins back to Kevin to take us forward for the rest of the hour. Thank you.
Great. Well, thank you very much indeed, Stephen, and thank you all to our attendees today for coming in to the session. I think we're going to be in for a very interesting 60 minutes. But before we do all of that, I think it's fair to say that just about every business across every sector in the United Kingdom has in some way or another been affected by coronavirus. And in today's session, we're going to be discussing the impact that COVID-19 has had and what the opportunities have been for investors and developers and asset owners as we begin to emerge into a brave new post-COVID world. There's also going to be some audience interaction too, and we're going to have some live polling and a little bit more about that from me in a moment or two, and I'll explain how that's going to work. But first of all, let me start by saying thank you to our virtual hosts today, to Marketing Liverpool for all your help and effort in putting today's event on, to our friends at Brabners. It's great to have your support with this, and of course to the Avison Young team. Thank you all very much to the team for helping us put together today's webinar and getting us all together. I think we're going to be in for a great session. So without further ado, let's make a start by welcoming our panel that's going to guide us through our topic. And first of all, it's my great pleasure to introduce Mark Kitts, who's the Assistant Director for Regeneration for Liverpool City Council, leading on housing. A good afternoon to you, Mark.
Good afternoon, thank you.
Nice to see you there. And first of all, then, let me turn to introduce Helen Burns, who's a Legal Director at Brabners. Good afternoon to you, Helen.
Good afternoon, Kevin. Thank you for having me.
It's an absolute pleasure. And to Peter O'Brien from Avison Young, who is the head of Valuation Consultancy at AY. Hello there, Peter.
Hi, Kevin. Thanks for having me.
Good afternoon to you. And finally, but no by least, to Roger Clarke, who is Managing Director and Head of Capital Markets at IPSX. Good afternoon, Roger.
Thanks, Kevin, and good afternoon, everyone who's dialed in.
Very good. And Stephen, although that he might have disappeared from our panel, he is still with us virtually. And I'm very pleased to say that if things get a bit tricky, I'm going to be bringing him back into the conversation. So whilst he might not be with us all the time, we can certainly bring him back if things get interesting, which I'm sure they will. So stand by, Stephen, for a return visit. Anyway, before we make a start on the session, let's just cover off some housekeeping points, if I may. I'm afraid all the attendees this afternoon are muted. However, that does not let you off the hook, far from it. You will find that you have a question and answer box, and the panel and I would welcome any thoughts, points, comments, observations, questions, and anything else that you would like to put to us as the session unfolds. And in fact, this session is completely interactive. So no presentations, no slides, nothing like that. It is a conversation. So please join in. We'd be very welcoming to have your comments. And oh, I did say right at the beginning that, that we are going to have some audience interaction. So to warm things up, to get us going, I'm going to ask you as our audience to vote on a couple of opening questions, if I may. So let's take a look at our first question for the afternoon. And if we could bring that up now, that would be great. So audience, and I think the panel can also vote on this too. Let's ask you this question. Are you considering or supporting a team that might be considering finance options for real estate projects in the next 3 months? So if you could answer very simply yes or no to that, that would be terrific. We're just going to give you a couple of seconds to give us your responses. Panel stand by to see what they all have to say about that. Okay, let's take that poll down and let's see if we can try and get a quick result. Ah, there we go. Wow. So 70% of all of our attendees are in some way or another thinking about financing a real estate project. So that's going to be very interesting. So today's session seems to be extremely timely given where everybody is at. Okay, thank you very much. Let's bring up our second question to get us going. Okay, so it's a question straight away about confidence. How confident are you feeling about the success of your project? This is going to be an interesting one. Okay, let's get you voting on that, if we may, please, audience. This is testing the water, feeling how the temperature is out there. Okay, thank you very much. Let's take that poll down. And if we could get a result for that. Very good, 73%. Yeah, great confidence in Liverpool this afternoon is what we love to see. Great. All right, well, thank you very much. Let's take that poll away. So let's crack on with the session. And I'm going to start with 3 big questions for all of our panelists, and I'm going to give them all the opportunity to answer. And as I said before, this is also an open session, so please do fire in with any points or thoughts or comments that you have as we're going along. So, panel, first big question for you today, and I think everybody here acknowledges the ambition and the plans that Liverpool has for the future. And my first question for you all is, well, what are therefore the main priorities and the projects that the city has? And I think an addendum to that question would then be, how are we going to finance these? So Mark, I'm going to come to you first, if I may. Helen, I'm going to come to you after that, thinking about the finance point to that. And then to Roger, where we're going to start to introduce a different sort of angle to this, I think. And then lastly to Peter from a valuation perspective. But Mark, please kick us off. Where are we with the plans and the ambition that Liverpool has for its future, and what do you see as being the priorities? Of course, as I introduced you, your lead here is on housing, but I am sure that you're going to be talking about other things too.
Yeah, thanks very much for that, Kevin, and good afternoon, everyone, and thanks for the invite to this. Yeah, I mean, pre-COVID, we were talking about a regeneration investment programme in Liverpool of somewhere in the region of £6 billion worth of investment opportunity. And that kind of shared itself across a number of geographical areas of focus, both directly within the city centre and also on some of the edges of the city centre as well. I'm talking about areas like the Knowledge Quarter and its expansion with the likes of Paddington Village, the area that's become known as Upper Central, which is the gateway to the Knowledge Quarter from the city centre, areas such as the expansion of the Baltic Triangle, the 10th Street Strategic Regeneration Framework area, and a number of others, including the Central Business District as well, not to forget that one in particular. And the kind of main focus was obviously on job creation and inclusive growth, which is a massive issue for Liverpool, given the issues that we've had historically around the levels of unemployment and employment across the city. And I think through partnership working over the last couple of years particularly, we started to see the benefits of that inclusive growth, and we've worked with partners very hard to pull together a new city plan for Liverpool, and that's got a very strong focus on a strong inclusive economy that's well connected and accessible with quality infrastructure. And for me, you know, some of the things that we're getting ourselves into in terms of key priority projects, but basically got to focus in around getting people here, getting people around the city, and making sure that they're able to do business in the modern day world. And I think it's, it's there for everyone to see. As you drive around the city at this moment in time, you'll see works on the Strand, you'll see works to the Northern Gateway that connects the Liverpool water scheme with the proposed cruise terminal, the 10 Streets area, the potential for Everton Football Club Stadium at Bramley Moor Dock, all with the city centre and the outlying community. And all this was going great guns, I was pleased to say, up until the pandemic. And then, quite clearly, the world had to take a step back. It's obviously provided a great opportunity to do some thinking and to rethink and reset the way in which we might want to do things. And I think one of the important things and one of the good things about Liverpool is that it's always been and will continue to be a very resilient city through times of crisis. And, one of the pleasing things for me was that Liverpool got its act together really, really quickly and was, I think, the first city nationally to submit a proposal to government for economic recovery. And that was shortly followed by the city region's economic recovery plan not long too after that. And the main focus really of that economic recovery plan activity was around really providing a focus on shovel-ready projects. So when we talk about those, we talk about delivering projects within the Paddington Village Knowledge Quarter expansion, projects that are City Council led, such as the Spine, which will, have of all different kinds of knowledge-based businesses and industries focused in there, sitting alongside the universities and hospital infrastructure that we've got within the city. I think in addition to that, we've got the likes of the Pall Mall development, which is a City Council-owned site within the Central Business District, and also the quirky film and TV studio on Edge Lane, which I know has been a conversation probably for about 3 years, but it's coming very close now to delivery, courtesy of not only the work of the private sector and some potential institutional investment, but also funds from the council and the combined authority through the economic recovery plan work that we've been doing. And that's not to say there's not a role for housing in all of this, which is my speciality. And, we've got a very ambitious programme to deliver 10,000 new homes across the city over the next 10 years. And that isn't just about new homes on brownfield sites. That is also the renewal and retrofit of some of the city's most challenging neighbourhoods in areas like Kirkdale, Anfield, County, Tuebrook and others that border Liverpool city centre and historically have provided the home to many a city centre key worker. And even further back in time from that, they were homes for the dockers when the city was at its peak. So all of those in effect are what the city would determine as its key priorities at this particular moment in time. And I think the pleasing thing about all this is that, there is still, despite all the challenges, £2 billion worth of activity currently on site at this particular moment in time, which is great news. But I think in addition to that, we've not to forget there are other challenges. If the statistics prove right, then there's a potential for the unemployment rate to go up from 4% to 10% as a response of the pandemic and the impact of the end of furlough, etc., etc. But there's also the impact of the fractional sales issue, which has been a big issue for Liverpool and many other cities across the country in recent times. And, I'm pleased to say that, the council have done a lot of work on this over the past couple of years and have reported recently to Cabinet on the issue of fractional sales. So from an investment point of view, again, Liverpool has quite rightly taken a very strong leadership role and determined that, fractional sales is one of those forms of investment that we don't really want to see much more of in Liverpool because of the impact that it's had. Yep. But having said all of that, on a more confident note, there is strong interest from institutional investors, from investors with a green background involved in sustainable forms of development, looking to reduce climate change, particularly in historic properties, but also ethical finance-based organisations as well, who are looking to try and support the city with their attempts to look at social value outcomes and positives around jobs, training and apprenticeships. So I think there's a lot to play for at this particular moment in time, and I'm really pleased that Liverpool's on the front foot and trying to do the best that it possibly can in this particular difficult time.
Thank you very much indeed, Mark. And I am sure that our colleagues on the phone and joining us online will be wanting to come in on some thoughts about priorities there and how we're going to manifest some of these big projects. I mean, there is absolutely no doubt about it. Massive ambition, and indeed we've seen that from the government trying to get back to its levelling up agenda. Let's move to Helen, if I may. Helen, we heard there from Mark talk a lot about a number of these schemes and these projects. I'm sure from your perspective, from Brabners' perspective, you've been involved in a lot of those. What are you seeing? What are you seeing at the moment, and what can you tell us about how successful and how well are these are working?
Thanks, Kevin. So Brabners has a 200-year-old history with Liverpool, and we've seen the resilience, we've seen the ambition, and we've seen the change in the city. And what's great is no matter what happens, Liverpool comes out fighting, and I think that's one of the real key points in the north and in the Liverpool City region. And that's why it's still attractive as an investment proposition, no matter what happens. So Liverpool have come out in the last 12 to 18 months and said, look, we want to be a world-leading city. The Liverpool Water Scheme, opening up the city to the rest of the world, the port faces the right way, the city is encouraging people in. It's creating that gateway in to a city that's known across the world anyway because of its diversity. And it makes it a more interesting proposition for investors coming in. Liverpool's also been a big leader in brownfield regeneration, which Mark has spoken about. Obviously, the reclamation of Liverpool waters in certain areas there, which Brabners have been involved in part. We also look at the Festival Garden Scheme, which has been backwards and forwards a few times. That's a great example of how funding is playing into how Liverpool is being developed. So what you're seeing a lot with schemes of this size is a JV partnership arrangement being created amongst the developers, the council, institutions like Homes England, who are bringing a different piece, to the puzzle. They know the land, they know the region, they know what's needed, and delivering these really, really exciting schemes. So from the funding point of view, you are seeing a lot of JV partnerships for development, but we are also seeing a lot of institutional funding, as Mark said, particularly when we're looking at the student markets and historically buy-to-let, though there's an argument that market's already been stagnated. So there is funding coming in, and Liverpool as an investment proposition is a good one. London has been priced out of the market now, and there's nowhere for the London market to go. There's more opportunity in the region, and as Mark said, Liverpool is becoming a destination. All the infrastructure is being put in, so I think we'll see some really exciting things coming out. But from a financing point of view, to date, it's all been a little bit, as you were, gentlemen and ladies, what you would expect to see. But I'm pretty sure Roger's going to have something to say about that.
Oh, I'm sure he will, and that's a great tee up. Roger, let's bring you in. Now, many colleagues, I am sure, won't be that familiar with the IPSX proposition, so might I ask you just to set that out, and particularly in context here of how an exchange like IPSX can really help facilitate and drive investment in to a region like Liverpool.
Yeah, thank you, Kevin. So, yes, IPSX is the property stock exchange. It's a new market. It's launching this month. It's taken a long time to get here, but we are finally launching our first IPO this month. An IPO, so we're a stock exchange where companies can list and sell shares to the public, to everyone, to institutions, to sovereign wealth funds, private equity investors, but importantly also to retail investors, to local residents, to locals. We can sell shares to everyone, but we can sell shares in companies that I sometimes like to say to people, this is not a new idea, right? Stock exchanges have been around for 300 years. And we're just like, say, the London Stock Exchange. The IPO will be led by lawyers and bankers who will produce a prospectus. It's a document which is, as many people on this call will know, it's quite painful to produce, but it's painful because it incorporates all possible due diligence and information, everything and anything that you might need to know about the company. So it's an important document that gives investors a lot of comfort. And once the shares have been listed, IPSX, just like any other stock exchange, will then have market makers, stockbrokers, who will make prices in the shares every day. Two-way prices, which of course importantly means that if you own these shares, you can always sell them. You can sell them at any time between 9 o'clock in the morning and 4 o'clock in the afternoon. Never gated, never closed, always a value, no uncertainty about anything, always a price. What is new about IPSX though is that these companies that we're going to list will own real estate. And importantly, single pieces of real estate. We're going to securitize buildings and real estate projects. Well, I'll come on to explain how we can securitize development, JVs, etc. But we're going to securitize single buildings rather than give people the chance to buy into great big portfolios that have a bunch of stuff in that you never really know for sure. And that's really exciting because that means that you can buy a share in a building that you want to choose. And this is an idea whose time has come. You know, increasingly people want control over what they put their investments into. They want control over how much they invest into certain things, and they definitely want control over deciding when they want to sell their investments. I completely agree with what Helen was saying about regions. You know, I am not an expert on Liverpool like many of the people on this call. I am sitting here in London at the moment, and I completely agree with what Helen was saying. London is probably going to be the biggest loser from the COVID lockdown, because I don't subscribe to the idea that offices are dead. I don't subscribe to the idea that people will work from home forever. I don't believe that as a species, the human race will change forever just because of this rather unpleasant pandemic. But I do think that in the short to medium to extended medium term, people are beginning to think again about what sort of lifestyle they want. And whilst people don't want to work from home, they also don't want to sit on a train for 2 hours to get to London to go to work anymore. And I think cities like Liverpool and Manchester, Leeds and Birmingham, Bristol are going to benefit hugely from at London's expense. And the last thing I want to say, Kevin, is particularly when Helen was talking about JVs, I think these are very interesting. And as Kevin knows, we at IPSX are talking to the public sector a lot about how we might help provide access to new sources of capital for these sort of projects. And this capital is there in huge amounts. You know, I often like to say to people that whereas in the past, a lot of people thought about real estate as being a sector of markets. You know, there's a real estate sector on stock exchanges. There's a real estate sector in bond markets. Real estate is an asset class in its own. And one of the things I think we're all beginning to realize more and more is you don't lump all real estate together. It's very important to look at the specific asset and think about the specific value drivers of that asset. And when it comes to local authority joint ventures, the type of which Helen was talking about earlier on, yeah, these sort of partnerships are increasingly important. But what I think is really exciting about IPSX is extending that reach into the private sector beyond the traditional institutional sources to potentially local investors. I'll leave you with one example, and I'm afraid, I apologize in advance, it's to do with Manchester, but when I talked to the guys at Peel, they said something to me very interesting, which was that of all of the bondholders in the Trafford Centre, they reckon that nearly a third of those fund managers, wherever they might be sitting, they might be in New York, they might be in London, they might be in Singapore, but a third of the people who bought those bonds grew up in Lancashire. And there's something quite nice about investing in something that means something to you more than just being.
I think that's absolutely right, and being able to see that asset as you're walking past it every morning, or it's part of something that you've grown up with. Yeah, what a fantastic opportunity. So just to summarize there, Roger, IPSX, new stock exchange for real estate. It allows single buildings to come onto our prime market, and it allows investors to be able to trade shares on the company that owns that single asset. Great. Okay, so thank you, panel, for coming back to me on those points. Peter, let's bring you in from a valuation point, if I may. Now, valuers have been very much in the news over this last few weeks. We've seen a lot of commentary about the uncertainty clause. Thinking about what Mark was saying, and from Helen's perspective, where do you see the valuation principles beginning to play out here from basically from a development point of view, and indeed going forward, thinking about valuing these projects and these schemes?
Yeah, thank you, and good afternoon, everyone. I've been listening with interest to everything that's been said and making notes here. Everything always comes back to price and value, and that's essentially what my department and my team do. So, this is going to be fundamental to these projects going forwards. So we work with a number of the clients that Helen works with, financing institutions, as well as just other institutions that are looking to make an entrance point into a market, but they don't quite understand fully how that local market might function and what pricing really looks like going forwards. And so we will undertake a modelling of a development from a cleared site basis, modelling that going forwards and projecting rents, yields, etc., to highlight the key risks before they make that entry point. And we do that for both institutional investors and for lenders, for them to properly assess their risk. That's key to the whole situation with IPSX. As you'll know, we have undertaken valuations for IPSX recently, and there's a large one that people might hear about in the not too distant future. But I do agree with what's been said around how the markets are moving out of London and into the regions. I think from that perspective, everything that's been said about Liverpool, the demand for Liverpool, the investment demand for Liverpool is increasing every single year. And the interest in that as a location is so significant, it's beginning to outweigh other locations. And I think it can only benefit from the pandemic coming out of this, as that migration of interest, it just continues outside of London, basically. So, but agreed, it all comes back to value and price, and that's what we're here to do, to assist with that, whether it's a financing proposition or whether it's a listing on IPSX.
Brilliant. Okay, thank you very much indeed, Peter. And I am sure we're going to be coming back to you again and again this afternoon, because I have no doubt there'll be a lot of questions that people have about value and about how valuation effectively is working. I can see some questions already beginning to come in from our audience. Thank you very much for those. Keep them coming. And I will be making time to come to those. Panel, keep an eye on those, and I'll be coming to you to pick up on those. But Roger, if I may, I would like to pick up with you, if I can, about what you were saying there about investment demand. And it's very interesting at this time how you are beginning to engage with investors thinking about investment decisions and the kind of assets which they are interested in. And I guess the question I have for the panel here, and again, I'm sure the audience will be keen to explore more options around this, but what is it that you are seeing? And again, I'll bring this question to all the panel. What is it that you are seeing that investors are really looking for when they're thinking about making these investment decisions? Once Roger has responded to that, Peter, if I may, I'm going to come back to you from a valuation point of view to give us your thoughts on what you think investors are looking for. Mark, I'm going to come to you with thinking about what is the city doing to respond to what investors are looking for. How easy is it that you're making it for investors to make that decision there in Liverpool? And lastly, to Helen, about her thoughts as she has been working on these structures that she was telling us about earlier. So Roger, kick us off on this one.
Well, some people, there are always exceptions here. Some people will like the idea of a total return, high risk, high reward property development strategy. But on the whole, I would say 95% of the investors I speak to are looking for secure asset-backed income streams from real estate. This was always, should always have been the big attraction of real estate. Indeed, if you look back over the last 70 years, UK real estate has produced total returns of around 9.7% across the board. And of that, 6.3 percentage points of that return have come from income. So real estate has always primarily been about income. And today that is more so than ever. I think, every single day, if you follow what's being said by various central banks, and of course, most importantly, the US Federal Reserve, is effectively telling us that they can't get inflation up. They're trying to. They want some inflation to come back into Western markets. And the only thing they can do to try and stimulate it is to keep interest rates at zero forever. You know, we used to talk about lower for longer. I think it's now zero forever. So fixed income. I heard someone being interviewed the other day who described bonds today as, we used to think of them as risk-free returns. You know, fixed income with a good covenant, especially a government bond, would give you an income and you would get your money back, risk-free returns. Now I think people are talking about them as returns-free risks. So if you want income, you need to look to real estate for it. But of course, there's a lot of people who cannot invest into real estate directly. Either they don't have enough money because big real estate projects are expensive, or they don't have the expertise to manage the real estate when they bought it. So opening it up by fractionalizing it is something that, as day in, day out, people tell us that they're really pleased with what we're trying to do at IPSX to make real estate more accessible to people. But Kevin, it's income. It's all about income.
Great. Okay, thank you very much, Roger. Let's turn, if I may, now to Peter. What are your thoughts from a valuation perspective?
Yeah, I'd agree with what Roger says there. It is about income, but also I think that the beauty of real estate investment is it's a tangible asset that you can see. So it really comes down to the basic fundamentals, and there's four mainly. It's location. Is it in a good location? Is the location right for the building's use? Building quality. Is the building of good quality? Is it sustainable, etc.? Is it BREEAM rated? Is it fit for purpose for the type of use that it's being used for? And then number four, tenants, occupation. What is the status of the tenant or tenants occupying the building? What is their financial standing? Are they good tenants? Will they be resilient to market fluctuations? And then after that, number four, you can put it as number one or number four, it comes back to income. So those four basic principles, I think fundamentally, everyone falls back to before making an investment decision in real estate, as it is a tangible asset. You can touch it, and it's great to go and see it before you invest. But those four basic principles, I think, is what people are looking for before they actually pull the trigger on any investment.
Okay, and I am sure, team, that we're going to come back to how the sectors within real estate, and particularly from a Liverpool perspective, are performing, and looking forward, how we might see that begin to affect investment decisions, and indeed what schemes we want to be prioritizing, because we can see that investors are wanting to get into that kind of project. But let me bring Mark back, if I may, because of course investment decisions are key here to the big city plan that we were hearing about. It was key, it seems to me, Mark, in terms of the decisions that you're making over approvals and about the way that you are wanting to encourage investment in to the city. What can you tell us about what steps you're taking to do that?
Yeah, thanks, Kevin. I think to be honest, you know, for the last 10 years, Liverpool, for me, has been a very kind of business-friendly city. You know, that was the mantra that Joe Anderson brought to the table when he became leader of the council and then subsequently mayor. And we've kind of carried on in that vein ever since, really, and no more so like the present. And I think for me, one of the big things is about demonstrating that leadership and providing clarity for potential investors. And when speakers talk about location and occupation and income, one of the big things that we can do in terms of location is give some certainty to that particular location, whether it's like a spatial conversation about, well, what is that location now? What is it set to become in future? What will that mean for that particular investor in the decision-making process? So being clear about that is really important. And I think as well, if there's any requirement from an investment point of view to turn around an investment inquiry into a planning application and then an approval, it's all around being fleet of foot and making sure that we're positive, proactive, and that decisions can be made in the right time for that investment inquiry to turn itself into reality. So I think those two things are really important. I think depending on the type of investment inquiry, obviously, you know, there are connections into the city's infrastructure, either within the council or outside of the council, when it comes down to looking at the employment market, skills, connections to the university and training providers and what have you. I think as well, the business support organisations and functions that exist within the city are also important. And I think finally, we've had over the last few years quite a lot of business enquiries about relocations, and this picks up on a point earlier on around, you know, London suffering the most and potentially, you know, business relocations from the likes of London into the cities. And Liverpool obviously wants to and has been doing, positioning itself quite well to try and receive some of those inquiries with positivity. And what that takes you into then is a conversation around housing. You know, where do people want to, you know, what are they going to offer to the executives within the companies, to the managers within the companies, to the workers within the companies? And I think housing is another agenda when it comes down to the offer for a business inquiry and an investment inquiry.
Okay, thank you very much indeed, Mark. Good to hear some of your thoughts on this point. Helen, let me turn to you, because of course we've heard here about lots of different reflections on what attracts investment in, but I wanted also to bring you in because of course what you were saying to us earlier was about the structuring. In other words, how you bring people together, how you bring partners together to deliver these projects. And there must be something here about what is it that they look for in the structuring of the agreements that attracts investments in to want to do these deals. Well, what can you tell us about that? And is it changing?
I'm going to be a little bit controversial, actually, and take issue, sorry chaps, with the view that investment's all about income. I'm going to challenge that a little bit and actually say investment's more about the exit position and what do you want to get out of that investment? Because we have two different categories of real estate that we see being invested in. You have property that's held as an investment, where you get your rental income that pays down your loan, and it's a static position, really. There's a long-term investment. But then you've got investments that are put in either as trading companies or as prospects. And it's your prospects where your investment and your return on the investment, it depends on the opportunities, and those are the opportunities Mark was talking about. So, you know, the extensions to the planning regime that my colleagues are having so much fun with at the moment. You know, it might be about a quick return on the investment. You might not be interested in the rent. It's the potential for the sale and the potential for the uplift in the value that's important. And so depending on which of those two routes you're going to take and how you want your investment to be returned will depend very much on how you structure it. So if you are going to be holding an asset as an income stream, we look at the more traditional models of investment finance. So you know, it might be split between mezzanine and senior lender, but it is ultimately an investment bank or other funder coming in and lending against the value of the property, because you know, you pay off your loan over 25 years or whatever. It's quite a static position. If you know you're going to be there for a while, but you want an immediate return, you might do a sale and lease back. Again, that's an immediate return on your investment, you know, but you have to pay it back down. If you are going to be dealing with a trading entity, that's when we start to look at joint venture agreements. So your specific type development type is a great example of this. You have someone who owns the land, someone who comes in as the developer, and your investment comes out of, you know, either your profit share if you're the developer or your income stream as part of the development costs. So ultimately what you're doing with it will depend on how you structure the transaction. Slightly separate from that is a little bit more akin to what Roger's been talking about, issuing equity investment straight into an SPV co. I'm sorry, I'm a real estate finance lawyer, so my apologies in advance to all of my corporate colleagues. The equity goes in as shares, and then there may be shareholder loans put into that parent company. And again, your investment will be paid back via dividends, or if you put investor loans into it, you'll get money back as your interest.
Okay.
Traditionally, that's how it's worked.
Very good. So I'm going to come back, if I may, on this sell and lease back point.
Yeah.
Roger, let me bring you back in on this, if I may. So with the IPSX proposition, as you were outlining earlier, I understand that from what you were saying, and this leads us into a very different approach to how an owner of an asset might be able to release value in it by using the exchange.
Yeah, I mean, at its simplest, compared to the traditional sale and leaseback market, where you can sell the building and lease it back, or you may even be able to sell it into a JV arrangement and have a financial partner for, say, 50% of the value of the building and lease it back. Those are fairly limited and binary options. Obviously, with a stock exchange as your counterparty, you can sell anything from 25% of the 25% of the asset to 100% of the asset. And that flexibility, if you think about it, it can be tremendous, because it's not just flexibility on the way in, it's flexibility on the way out. One of the things that we always find people mention to us is that setting up JV agreements, a straightforward sale and leaseback is straightforward, right? But a JV agreement can be very clunky to unwind. Once you have a stock exchange as your counterparty, the unwinding of it's quite easy. You can either sell further shares, or of course, you can buy those shares back. Again, this is something that's quite interesting to corporates we speak to. The idea that you can release capital, but the sale of the asset may not be terminal and once and for all. But lastly, and I think the most exciting thing for me about what we can offer to people thinking about sale and leasebacks is this idea that rather than have as your counterparty a big financial institution, you can actually engage with your stakeholders. And those stakeholders could be employees, they could be customers, but you can sell a small number of shares now to people who might really want to invest in your business or assets associated with your business. And that's new.
Very good. Okay, thank you very much. Now, panel, we've had some questions beginning to come in. I think let's pick some of these up. The first question this afternoon we've got in, I'm going to read it out. It's quite long, but for the benefit of our audience, I'll read it quite slowly. I'm interested in how we fund larger scale community-led schemes that enables wealth to be created but not extracted from the community, with ethical institutions coming together with the community to invest, create jobs that make money, with profits being shared. Excuse me. Liverpool has a great track record of socially traded organisations turning derelict land into attractive destinations that attract more investment and increased land value. So post-COVID, how do you see the market being attracted to invest in large schemes that are community-led and owned? Mark, could you kick us off on that one?
Yeah, no problem at all. Thank you. I mean, that's a really interesting question, and it depends what you mean by large, I suppose. But I've got some experience of a community land trust and the work within the Anfield Regeneration programme. That's been in existence for probably now 6 or 7 years. The community land trust in question is an organisation called Home Baked. And basically it involves the acquisition of a number of properties formerly owned by the council for conversion into partly business space but also partly residential space, and that is done in partnership with the council but also with a registered provider of housing. So there's an exit from that perspective, a funding provision, but also an exit in terms of the kind of landlord tenant relationship. So so sometimes for me these kind of projects are generated and sit around a strategy for an area. And one of the things that I always look for within trying to pull together and deliver a sustainable regeneration project is to make sure that the local community have got a role to play. And also they have some kind of skin in the game, so to speak, and some involvement in projects in some way or other. So we've seen a number of similar type projects, such as the Home Bay project in Anfield, operational across different parts of the city. I think there's one similar in Granby, one in Toxteth, and another one in a similar territory in Anfield.
Okay.
And you know, for me, it's all about the council's role is all about listening to those communities, engaging with those communities, seeing if there's an idea that can be built upon, and then supporting them in whatever way that we possibly can to bring the right partnerships together to deliver the kind of social outcomes that the community is looking for. And I think Home Baked is a classic example of that. And if anybody doesn't know it, they should do. And for those who do know it, I'm sure they'll talk positively about it.
Yeah, very good. Thank you very much, Mark. And apologies that my voice went a bit weird, and hoping it's going to come back and not be so weird. Roger, from your side, you were talking earlier about share ownership and how share ownership might be able to be cascaded across projects like this. Could you see a place here for some of these projects that we've been talking about being deployed in this way?
Yeah, I mean, certainly something that I would like to see happen and could envisage happening is that the community infrastructure levy. We always think in terms of this as being affordable housing or it being some sort of social infrastructure. But one of the things that you often hear from tenants, certainly in projects I've been involved with where regeneration has been happening, and I mean regeneration rather than just development, is that tenants have sometimes worried about being displaced, they've worried about the community changing, they've worried about losing a sense of identity and a sense of ownership. And I think that the idea of being able to actually distribute shares to the local tenants so that they literally do own part of their community is a really nice one. I think there's always a place for somebody has got to make some sort of return for their risk to do these regeneration projects, but there's definitely a world in which it could be shared more with the locals, I think.
Very good. Okay, thank you very much indeed, panel. Let's move on. Helen, I've got a question here for you, if I may. It comes back to what you were saying earlier about JV agreements. The question is, JV agreements seem to have become very complicated and tortuous. Isn't there a real need to simplify the structure?
I can feel my work email pinging as I speak with comments from my corporate colleagues. They are incredibly long and convoluted and torturous, particularly when you get into profit sharing arrangements and share buyouts and all of the random things that go into corporate agreements. I'm holding my hands up. I'm not a corporate lawyer, no. But I have been on the receiving end of them. We do a lot of development management agreements that obviously sit alongside the JV. And I agree, from a fees point of view, the corporates get the bigger slice of the pie than the property lawyers do because the structuring is so complicated. And I think that's part of what we're recognising today, that there are the old ways, but perhaps there should also be some new ways as well to try and make it more accessible to more people.
Okay, thank you very much indeed, Helen. I'm not going to bring that back into the rest of the panel. I'm going to move us on, if I may. There's a question here that I'd like to put to you. Stephen Cowperthwaite, I might have to put you on notice to come in and share your thoughts. So be ready to come in, if I may. So the question is this. Developers and investors into Liverpool want certainty of delivery. And we've talked a lot about that already this afternoon, with a number of building plots around the city going into administration, a number of developers going bust, a number of contractors also going that way, a number of planning applications being overturned, not being sent to committees for approval. I won't go into all of the other negative comments that are coming in here, but the key point of the question is, therefore relationships are key at the moment. Assistance from Liverpool City Council and their planning department is more important than ever. Maybe a link is needed between the city and private developers. Now, Stephen, I'm going to bring you back in a minute to talk about this, because I know in your world you have a lot to do with this. But before we do that, Mark, is there anything you would like to say or comment upon in terms of that? I won't say so much of a question, more of an observation and a comment, but let me bring you in.
No, thank you for that, Kevin. I mean, it's It's a very good point, to be perfectly honest. You know, there are some challenges associated with some of the points that have been made by the attendee, and I do think that relationships is key to overcoming some of these problems. I mean, you know, I've worked for Liverpool City Council for 19 years, and I think one of the things that I've always tried to do is make sure that relationships are at the front end of the daily work priorities. And, you know, I'd like to say that I've got good relationships with private developers. And, you know, that's something that I can take back into the ranch to make sure that I can share those points with planning colleagues. Because I'm getting from the point that there are a few pointed fingers at the planning department, and you know, maybe some of that's fair, maybe some of that's unfair, and we obviously don't want to talk about individual circumstances. But from a kind of a delivery perspective, I mean, I made the point earlier, and I wasn't making these figures up at all, but £2 billion worth of development currently on site is a positive in Liverpool, and all the projects that we're looking to move forward with, some of which are, you know, national and international game changers, are really, you know, at the forefront of our thinking at this particular moment in time. But there are stalled sites, and we can't get away from that. And there'll be a variety of reasons for those stalled sites. Some will be as a cause of the result of the pandemic. Some will be for other reasons, funding or otherwise. And, you know, we need to try and find a route way through turning those negatives into positives. And, you know, one of the things I can say to attendees is that I've been given the task by the Mayor and the Chief Executive of the Council of actually reviewing the stall sites in the city on behalf of the City Council to see if there's a way in which we can move them forward. So, you know, relationships is going to be part of that. Speaking to the land and property owners involved in some of those sites is going to be really important. So I'm hoping the 19 years worth of experience that I've got in building those relationships will actually stand me in good stead for the task in hand.
Okay, thank you very much, Mark. I'm sure it will. Stephen, let's bring you back in, if I may. This seems to be a good opportunity to ask you your thoughts. You and your team at Avison Young clearly been leading on planning and development in and around the city for quite some time now. Is there any thoughts that you would like to share on the points that were being made?
I think just following up on what Mark has said there, it's yes, there are challenges around, but let's focus on some of the positives as well, and plainly what MIP and what the MIP and partnership is about. As I said, you know, right at the outset of the conversation, it is about collaboration between the public and private sector, working together and building those relationships. So absolutely agree with Mark said, the importance of those relationships. And across the MIPIM delegation, we have a whole range of consultants, developers from all different sections, all working together and representing a significant part of the development potential of the city, right from, you know, Liverpool Waters at the waterfront all the way up to Paddington Village. And I think, again, you know, look at what happened in lockdown with Legal in General and Bruntwood SciTech investing into the SciTech vehicle. I mean, that was a huge statement of faith in terms of the city and the direction of travel of the city. And I think what you've seen there is an excellent collaboration between the public and private sector, which I think stands us in good stead going forward. So it's certainly, this is what, you know, MIPIM is about from my perspective and the steering group's perspective is, as I said, it's not about a week in Cannes, it's about building these relationships over the 12 months and working very closely with our public sector partners for the benefit of everybody. Thank
you very much indeed, Stephen. Great words. And I would probably encourage colleagues that haven't reached out to Stephen and his team and the MIPIM team, please do so. If there's anything that you would particularly like to engage with the group on and where you are having issues or difficulties or whatever, please get in touch with Stephen and talk him through where you're at. I'm sure he'd be delighted to hear from you. Stephen, let me ask you just to take yourself back off the camera connection, and I'm afraid I'm going to put you back on mute again. Let's get back to the panel. We've got a few more minutes left before we bring to the end of the session. And of course, the elephant in the room, we cannot ignore what has been going on over the last few months since COVID was amongst us and with us. And we've all had to adapt in different ways to what this epidemic has meant and how it has affected our workflow and our workloads. And it seems to me that the new word for real estate is flexibility. And we are seeing week by week occupiers, corporates talking about needing new flexibility. We're seeing retailers asking for flexible options around the leases that they have with their landlords. And it seems to me that this is become the new word of real estate, flexibility. So panel, I'm going to come back to each one of you now to say, tell us what you think from your own perspectives that this post-COVID world really is meaning to real estate, and what you see as being the opportunities for it. So Helen, I'm going to come to you first, and then to Mark, to Roger, and finally to Peter. So Helen, are you able to kick us off with what you have seen happening over the last few months?
Sure. So property has historically been known as a fixed asset. All of our law dates back to 1925. Property doesn't move very fast. And I think what we're going to see as a result of COVID is a complete change to that. You know, we're going to have to be quicker, leaner. Things are changing. You know, my planning colleagues are seeing changes in the legislation every day at the moment. My litigation colleagues, you know, the changes that came in about forfeiture and abilities to recover property. So it is going to have to. It is going to have to become increasingly flexible. You'll see pulls on the owners from two different perspectives. So their own desire to be flexible, change use, you know, getting consent from their lenders, and maintaining the value in that property. So changes of use are going to be quite interesting, and how lenders react to those applications for changes of use. I'm sure Peter will have a view on how that will affect the valuation, obviously the way that portfolio LTVs have been calculated. And then just the flip side of that is the pulls on the owners, so the tenants wanting flexibility.
And I'm sure that Peter will be talking more about the implications to value in a post-COVID world, referring back to your point about leases and income. I'm sure that he will be doing that. But before we go to Peter, let me ask Mark, from a city's perspective and in your new role as Deputy Head of Regeneration, how do you see the post-COVID world beginning to affect your workflows in your work? Oh, you're on mute there, Mark. So if you could just take yourself off, that would be great. Yeah. Thank you. There we are.
Yeah, I mean, to be honest, it's as busy as ever. Basically, that's the easy way to say things. I think there's enormous amount of interest and appetite to do things in Liverpool, as we've already discussed during the course of this call. I think in terms of moving forward, you know, what does the future look like from my perspective? Well, I think it looks good. Obviously, we have the challenges that we've just touched upon. But I think if we try to take both a flexible approach, but also not to perhaps rush into taking decisions that perhaps might be the wrong ones for the longer term. And I'm thinking here mainly about, you know, change of use in the use of land or the use of property, particularly within the city centre. And one of the things that I'm particularly keen to look on, partly with my housing hat, is what does the city centre look like in years to come, way past my retirement, way past our retirement, is probably one of the things I'd like to say. What's the city going to look like in 20, 30, 40 years' time? Because the decisions we take now and the investment and the property development that takes place now will shape the future for years to come. So, you know, as a consequence of the pandemic, the one thing that I don't want the city to do is to rush into making the wrong kind of decisions for the sake of the future, really. So having that flexibility, but also, you know, just standing by your beds for a while and just seeing how things pan out is perhaps not a bad way of taking things.
Yeah, good words. Thank you very much indeed, Mark. Let me now move to Roger. So from a sort of a post-COVID perspective, Roger, how are you seeing investor appetite right now? The search for yield, the big question, where do investors look and how are we seeing the market shaping up in this world now?
Well, what I think is, what I often say to people is that I think many of the things that feel at the moment as if they are big reactions to COVID-19 are actually just extensions of trends which were there already. I think we were already beginning to see this big focus by investors on the actual use of the real estate, who it's being used by, what for, how long leases are, etc., etc. This was already happening. It's more important than ever. I think for me, Kevin, the one point I've found most interesting during COVID-19 is that whether it's purely because we've all been at home, whether it's because we live in a world today where people are encouraged to rely on experts less, but what we have seen is a huge, huge increase in trading volumes across the whole stock market in the UK and Europe, in the US, by individuals wanting to make their own investment decisions. You know, we hear about the Robin Hood investor in the US a lot, but the fact is that this ISA season back in April actually saw, depending on which retail platform ISA providers you speak to, between 3 and 5 times an increase on last year, the amount of people who took out ISAs that they wanted to invest themselves. And that's a really good thing. I think that's really to be encouraged, and it's really exciting, and long may it continue.
Very good. Okay, thank you very much. And lastly, let me come to Peter from a valuations perspective. Peter, we were talking earlier about some of the material uncertainty clauses that had to come in, which are now being lifted. But what would you say now is your reflection on where next? What do you see as being the next area of opportunity, if you like, but also an area of challenge for us?
I think, yeah, we've seen a lot of change. Let's just face it, you know, since March, there was significant change. You brought the clause in, and really the market stopped trading for a period. And now we're beginning to lift it. There are opportunities that are actually coming out of this. And I think, you know, the opportunities from a valuation perspective, based on what we're seeing, is they're going to continue to be in the industrial sector. They're going to continue, that's both big box industrial and multi-let industrial, but then they're going to grow into other sort of sectors that were already in the background that were very resilient. And I would say those would be the regional office sector. I think there's a huge push for corporates to move out. We touched on it earlier, move out of the big cities and move into the regions, into smaller cities. And you can actually get a cheaper workforce there, only just because you have a London premium and paying staff for them to be able to live there. But also your occupational cost is also cheaper. And if you're using it flexibly, like we just touched on, flex is the new buzzword. Everyone wants flexibility. Then you can reduce your costs even more. So I think in the industrial sector will continue to thrive, but it will be the regional office sector which will actually benefit massively coming out of COVID. And we're seeing it already, actually, with some of the rental changes that are actually playing out.
Yeah, very interesting indeed. Okay, some top tips there from Peter, which I'm sure we've all been scribbling busily away at. Now, I'm sorry to say that we're running out of time. Well, in fact, we have overrun already by 2 minutes. So a poor performance from your chair this afternoon. Now, thank you to the panel for all of your interactions so far. Now, what I'd like to do is go back, if I may, to our audience and ask you 2 final questions. And then once we've got the responses to that, I'm going to go back to our panel for our closing remarks, panel. So you might want to reflect on what comes back out of these questions, or you might just want to say what you think. That's absolutely fine. In terms of order, I am going to start with, first of all, with Helen. Then I'm going to come to Peter, to Mark, and I'm going to finish with Roger. And if I remember that, I've done extremely well. Right. Let's bring up our last 2 questions for our audience this afternoon. Audience, get ready. It's your turn. Here we go. Do you think we will see businesses moving away from the more traditional approaches of debt financing to considering new options for using their real estate? Vote yes if you think that's right, and of course listening back into some of the points being made this afternoon, and vote no if you think not. So vote away, please. And I'll close the poll very shortly, and let's see what you will have to say to that. Okay, let's close that poll and see what the results are. Look at that. Well done, panel. You've done extremely well. 92% said yes. We are moving away from the traditional approaches. Fantastic. Very good. Very interesting. All right. Thank you very much indeed. Let's move on to our last and final question for the afternoon. I could do this all afternoon. I'm not enjoying it. Right. Let's go. Let's have a look at this. Do you think Liverpool is in a good place to recover, and we should say from COVID-19, than other parts of the UK? So come on, Liverpool. What do you think? Vote yes or vote no. Let's see what you all have to say. Away you go. Okay, I think that's probably enough time. Let's get the results to that particular poll. Look at that, 76%, not quite as many as I thought, but nonetheless a pretty convincing, positive, confident response from our Liverpool audience. So thank you very much indeed, very, very interesting. And thank you, audience, for participating the way you have with our polls. Okay, let's go back to our panel, closing remarks. And Helen, I'm going to come to you first.
Thank you. I'm just wondering how many of my Manchester United supporting colleagues have driven that last figure down. I'm sure they will let me know later. I think there is going to have to be a shift. You know, COVID has been a catalyst for things to change. Things were changing, but probably not as fast as they have. People have had more time to think, more time to plan, and more time to make decisions. And I think that we will see a reaction to that, and we will see changes. You know, there has to be some evolution. Is Liverpool in a good place to recover quicker? It's not let us down yet. You know, it's reinvented itself so many times already. It's been the Madonna of cities in the UK, and we've got that great outward-facing port. We've got that ambition to become a world-leading city. And I don't think you can count out the Merseyside spirit to drive it forwards. I think we're on the verge of some quite interesting and exciting things to happen. So let's sit back and enjoy it.
Yeah, thank you very much indeed, Helen. Some very positive commentary from you. Thank you very much. Right. Peter, your closing remarks.
Yeah, thank you. I've been very encouraged by what I've seen today. I've done quite a few of these, both with IPSX and others, and all the way through the lockdown. And it felt quite depressing at certain points, but now I think it really feels that people see there's more confidence in the market. There is a route out of this situation. I think it's a lot of positives we can draw from where everyone's position is coming out of this. So there'll be winners and losers. We want to be on the winning side as much as possible. And I'm really encouraged by everything that's been said, and it echoes a lot of things that I've been seeing in the market. So that's great. It proves that they're quite truthful, the soundings I'm taking from the market. And you know, we're just very excited about the future, and would be happy to hear from any of the participants in the audience if they need any assistance on real estate decisions going forward, either to myself or directly to Stephen Cabberthwaite. But thank you very much.
Thank you very much indeed, Peter. And let me now go to Mark. Mark, your closing remarks, please.
Yeah, thanks, Kevin, and some great comments there from the other panelists. I think from my point of view, you know, it's great to see the confidence in the place, the market, and the people, as previously said. You know, but the key thing for me is that we don't take things for granted. We don't rest on our laurels. We've got to continue to be the resilient city that Liverpool actually is, and demonstrate true leadership and do the right thing, preferably first time. So for me, you know, I've taken a lot from this afternoon's conversation, and obviously there are some things that I can take back to the ranch as well. But I've been delighted to be part of this. So thanks very much.
Not at all. It's a pleasure, and thank you for joining us. And finally, let me go to Roger.
Well, I mentioned earlier on that I think regional cities, and Liverpool is definitely one of those best placed to benefit, perhaps at the expense of others. Also, I speak to a lot of international investors, and people who used to think that the UK meant London really are getting the point that it doesn't anymore. So I'm sure Liverpool is very well placed, and I'm also delighted that, you know, as the banking system gets frankly a lot more conservative at times and only willing to lend to people it already knows, I'm delighted that people are opening up their minds to seeking capital in less traditional places. But the really good news is that later this month, there is going to be a brand new place for you all to seek this new capital, and we're very proud to be part of that at IPSX. And as Peter said, we're on at the dawn of a new, longer cycle for real estate. So,
yeah, hear to that. Thank you very much. Okay, so I'm just going to close the panel now. Thank you, all of you, for coming along and for attending and for giving your time to this. And Mr. Cabberthwaite, over back to you to close the session today.
Thank you very much, Kevin, and to all of our panelists there. And despite what you said about it being a poor performance for going over time, Kevin, it was anything but that. It was really, really interesting debate and discussion. And I think good to see the positivity coming through. 76%, I think, is a pretty decent score. Bearing in mind, as Helen said, it's been pulled down by some Manchester people potentially. But yeah, no, I mean, I think, as I say, we've seen this throughout the various different webinars we've done through the Liverpool MIPIM programme, that there is a real sense of positivity. I think the work that the city and the city region have done in terms of the economic recovery plan has been exemplary. And I can look to, you know, the rest of the Avison Young network to compare it to how we sit in comparison to other cities, and I think we're pretty much ahead of the curve in that context. So really positive to look at. So I think all that goes for me to say is, once again, thank the panelists, to thank the audience for the participation as well. Thank Marketing Liverpool for the excellent work that they've done in promoting today's event. And then just to say that the next in our series coming up is on the 24th of September. It's a neat segue from today's discussion, because we will be looking at post-COVID, the opportunities for investment across the Liverpool city region, looking at those key growth sectors and locations, and how Liverpool city region sits in comparison to the rest of the UK. So look out for the everything on social media there, and thanks again everybody for your time today.
Okay, thank you very much indeed, Stephen. And finally, a very good afternoon from me, and thank you all for attending. If you'd like to know anything more about IPSX, please do jump onto our website, ipsx.com. Plenty of webinars, podcasts for you to download and to find out more about. And of course, if you'd like to know particularly how we can help raise funds for you on any projects that you happen to be looking at, please do drop us a line. We're really keen to help, and it'd be great if we could try and get something working in Liverpool. So a very good afternoon to you all, and thank you and goodbye.
Thank you.
Bye-bye.
Yeah.